What's up, everybody? It's Eli. Now, most trading channels open videos like this by showing you a setup, a pattern, an indicator, entry trigger. Here's what to look for. Copy this, and I'm not going to do any of that. I'm going to explain my entire strategy to you without showing you a single chart. After 10 years of losing money in this game, I figured out something that most traders don't figure out. The setup isn't the edge. The setup is the smallest part of the whole thing. The edge is the system you build around the setup. The rules, the limits, the time you spend in front of the screen, and the version of yourself you stop letting near the buttons. This is my framework, not the setups, the thing that those setups actually live inside of. I trade two instruments, the micro NASDAQ and micro gold, and that's it. I don't bounce between markets. I don't trade what's hot or different. I trade these two instruments every day, deep enough to know how they actually behave. I trade from 8 a.m. Eastern time, no later to noon. Usually I'm done well before that, but my goal every single day is to spend less time in front of a screen, not more. The longer I sit there, the worse decisions I make. And that's not a guess, that's just data I got on myself. Some days I'm wrapped up in 30 minutes, some days I use the whole window, but I take what the market gives me and I don't force the market to give me anything. Before I take a single trade, I have a read on the day, where I think the market is leaning and why. The read comes from a few places. I look at key levels of support and resistance. I mark the previous day's high and low. Those are some of the most reactive levels in the market, and I think a lot of traders just ignore them. I check the news, I check the macro context, what's happening in the broader stock market. I read a morning briefing I get from Claude Cowork that pulls all of this together so I'm not scrambling at market open. By the time the bell rings, I have a thesis. I have a prediction on whether we're in a range day or a trend day. I have a long bias, a short bias, or maybe no bias at all. On range days, I wait for the extremes. Buy near the low of the range, sell near the high. Honestly, those are not my best days, so I try not to trade them too much. That's just more data on myself that I have. On trend days, I do tend to do a lot better. I usually wait for a pullback to the key level or VWAP or somewhere price has a reason to react. I try not to chase. So if we're shooting up high, I'll usually wait for that pullback. I try not to buy at the top. Same thing if we're selling down low. I won't enter a sell at that low point. I will wait for the pullback to the level or VWAP. Let the price come to me. So let's talk about exits. I think exits are where a lot of traders fail. Entries are easy. Exits are where every trader I've ever known is bled out, including me. So I make my exits as mechanical as I can now. Brackets are set when I enter. My stop goes behind structure, not a random number of ticks or necessarily a dollar amount, but where the trade is actually invalidated. If the price pulls back deeper than my structure level, then I'm done. I'm out. Targets are usually at the next key level or predicted break of structure or even a trail that I put behind a runner if I feel like letting that particular trade keep going. There's discretion in how I manage it once I'm in, but the framework stops there. So I have my stop here, my target here, and then the only thing I'm really moving is my target. So if price keeps breaking, I think we have strong momentum. I'll get rid of my take profit, and I'll just keep sliding my stop loss up following it, usually behind structure, just to make sure that trade is actually invalidated before I get out. But these decisions are usually made before I click buy or sell. If I'm making exit decisions in real time with money on the line, my heart rate's up, I'm usually already losing, and my plan is the plan. Now, here's what the channel is built on: risk management, because everything I just told you about setups and exit, none of it matters if I'm not still in the game next week. So here's what's locked. My daily stop loss is set every single day before I trade. It's usually 100 to 150 bucks. When I hit it, I'm done. The chart could be screaming the trade of the year, and I'm still done. The discipline is part of the trade. Our risk is usually $50 per micro contract. If the structure requires more than that, then my entry probably wasn't that good in the first place. And that's a sign that I've learned to start listening to. Max right now for me is 2 micros. Most of the time I'm using one, and the size will grow with the account, not with my confidence. I do not trade during news. I do not try to be you know, big time gambler on FOMC meetings or CPI days, the occasional scalp here and there, maybe a pre-position if I have a real read on what's happening, but 99% of the time I'm flat throughout the news. After news, I'm usually done for the day. Um, Again, maybe a scalp, but definitely watching that risk management, lots of downsizing, and again, just 99% of the time, I'm done till the next trading day. If we are range bound and chopping by, let's say, 11 a.m., and I'm flat, I'm slightly red, I strongly consider ending my day right there. If I hit my profit target, which is also set before I start my trading day, I'm done no matter what time it is. I don't get greedy just because the day's been good. We are just done for the day. Every Sunday through Thursday night, I screenshot my risk settings, I lock my risk settings, I send them over to my risk manager before I go to bed. He verifies them. That way, Sunday night me can lock in Monday morning me. I think that's a good, habit for me. So here's where the edge actually lives. One, A plus setups only. I'd rather miss a good trade than take a mediocre one. Two, losers get cut every time. No negotiations. Cut your losers. Three, when the money's been made, I leave. I don't give it back trying to make more. Four, I reduce decision fatigue by limiting my time in front of the screen because the longer I'm there, the dumber I get. Five, my risk is capped before I sit down. So even on my worst day, and I've had plenty of worst days, the damage is contained. There's only so much damage that the worst version of me can do. And I think that last one is kind of the whole game. You don't need to be the best version of yourself to make money in this market. You just need to make sure the worst version of you can't do enough damage to take you out before the best version shows up again. A few things this isn't a system I'm selling. I'm not going to put in a course. I'm going to trade it live on this channel and you can watch it work or fail in real time. This isn't fixed. This is a version of whatever that I'm at now. It changes when the data tells me it should change. Monday used to be a normal trading day for me, and then the data showed me Monday are my worst days by a lot consistently. So now I either demo or skip, or I'll trade one micro with maybe like one trade on Mondays. But the system will update when I update. And this isn't going to make anyone rich quick. It's built for slow growth. If you want fast money, there's a thousand channels for that, and this is not one of them. So there's my framework set up inside of guardrails, guardrails inside of a routine, and routine inside of a version of myself that I trust. Live streams Tuesday through Friday usually. Risk is always locked the night before. You will see all of it. Hit subscribe if you want to watch it actually happen, and I'll see you Tuesday.